We were working with realtors, lenders, title companies, and we were able to be successful in the closing of the loans through DocuSign. DocuSign came in very, very handy, and it is a software that you can sign for most of the documents for the loan. So that was very helpful. Another form of security is Box.com. Box.com will be used when you are ready to upload your documentation. We will let you know when it's time, and when and how to do it. But we use Box.com. I want to make a note that you do not want to email documents to us that are unauthorized, such as maybe an application, a complete application, pay stubs, something like that. Don't email it to us. Email is not secure. When it's time for application, we'll ask you to upload those same docs to Box.com. For home buyers who are interested in purchasing their first home buyer education is a requirement. All the borrowers, including non-borrowing spouses, must attend a required 8-hour HUD-certified homebuyer class, education class. Now, these classes are offered in person, virtual, or online through a designated agency. And on our website, and also when you receive a copy of these slides, you will have a link to the list of the 9 designated housing agencies where you can take this class. The classes are offered in English, Spanish, and as well as other languages. And you'll want to check on that list of agencies, and they will let you know on that list which languages they assist with. You will receive a certificate upon completion of your education there, and the certificate is 1 certificate per person. So if you have a borrower and a non-borrowing spouse, that would be 2 certificates. And you'll be emailing those to us in PDF format when you receive them. These certificates are good for up to 2 years from the date they were issued, and they must still be valid at the time of application submission. I'll say that again. There's a lot of steps involved, and we're going to walk you through those steps. But you want to make sure your certificate is still valid when you do apply for the Empower program. Now I'm going to have some poll questions for you here and there. So let me go ahead and get this going here for a poll question. And we're going to launch them here. Oops, we had this here. We didn't change this. My apologies. Okay, so we're going to launch it here. But the question has changed as one of them. Have you completed an interest form on the Empower webpage? You can say yes or no. Now, some people may have taken their homebuyer education class through Project Sentinel or maybe a different agency. So you can answer that too and let us know if you have or haven't. So thank you, everybody. This is not a test question. It's not going to be pass or fail. So we're going to go ahead and go through that. All right, let's take the time here, and I'm going to go ahead and share results. So for the first part, 71% of you have not yet completed an interest form on our website, which is fine. There are no wrong answers here. I want to make a note about that interest form. It's not an application. You're just expressing an interest that you'd like to learn more about this book. Right. And it looks like 86% of you haven't yet taken a homebuyer education class, and that's fine also. Let's go ahead and continue here. Now, you're probably asking, how can down payment assistance help me buy a house? And what do I need to do? So let's start at the beginning. Down payment assistance can be able to assist you in reducing the monthly mortgage payment. You would like that. That's the senior mortgage. So with down payment assistance, that would be a second loan. But hold on, we're going to tell you more reasons why it's a help. It helps to reduce the debt to income ratios. The senior lender likes to see that, and so do we. That means that it helps you that your debt is within the limits so that you can afford a mortgage payment. It also can help you with the purchase of a home for a slightly higher purchase price. So by that saying more down payment, means that the senior lender may be able to qualify you for a higher purchase price. It also allows you time to repay the loan. The Empower loan is a deferred loan. You do not make payments on it. You have up to 30 years to pay it back. So you have your one mortgage payment with your senior lender, and you have this down payment assistance loans. It is not accruing interest, so it's not required that you make monthly payments, and there's no prepayment penalty, so you can pay it back early if you like. Also, having down payment assistance can help you to reduce the amount of funds that you have to bring in at the close of the loan, which we like to see also. Let me give you an example of what's included in a mortgage payment and how it can affect how can I say this? Don't want to say too much too soon. How can it assist you? And also, what's included in your mortgage payment? So here's an example. If the person does not have down payment assistance, let's say they find a home for $700,000, and that senior loan is 90% of that, and it's a 30-year fixed, 6.5% interest rate, so that loan amount for that first loan is $630,000. This home buyer has 10% toward the down payment, so that's $70,000 out of their own funds. This means their monthly payment might be about $5,425. And at this point, if you have your cameras, you might want to take a snapshot of this slide. If you notice, there's some very, very important acronyms at the bottom of the slide. I'm not going to go through them due to time, but you will be seeing and hearing these acronyms throughout your home buying process, so it's good to know them. But let's talk about what's included in the mortgage payment of $5,425. You have to pay principal and you have interest in that loan payment. So that comes out to about $3,982. We have to pay property taxes. That a monthly estimate is $729. Requirement also for home insurance. That's about $75. If it's applicable, you have an association, homeowners association due of maybe $450. And for this buyer has mortgage insurance or private mortgage insurance in the amount of $189. That's about $525. I'm going to make a note here why this home buyer has to pay mortgage insurance. Because the home buyer came in with a minimum of 10% for the down payment. If we go and talk to a lender or a bank or a credit union, we say, hey, I'd like to buy a home. What do I need to do? They may ask you, do you have 20% to put down of your own funds for a down payment? A lot of us don't. In this example, this home buyer had 10% and it was $70,000. So because this home buyer did not have 20%, he had 10%, that's why he has to pay $189 for mortgage insurance, and that's per month. Let's talk about a home buyer that has down payment assistance. How does it work? So again, the purchase price is $700,000. Now their first loan is 67%. It's a 30-year fixed at 6.5% interest rate. So that's about $469,000. This home buyer is coming in with 33% down payment. But let's find out how. Empower Down Payment Assistance Program can assist with up to 30% of that down payment. This buyer only has to come in with a minimum of 3%. So that's how you have 33%. So Empower, it can provide up to in this example, $210,000. The home buyer is coming in with $21,000, and the monthly mortgage payment is $4,218. That includes principal, interest, taxes, insurance, association dues, all of that's included in there. But you notice how much less this mortgage payment is. Let's talk about it. Included in this mortgage payment, again, is principal and interest for in an amount of about $2,964. Then you have the Empower loan, because that helped with the down payment, but it's a deferred loan, so there's no mortgage payment. This home buyer still has to pay property taxes, about $729 a month, home insurance, $75 a month, and association dues of $450 a month. But look here for the mortgage insurance. Nothing. This home buyer does not have mortgage insurance because the home buyer had more than 20% for the down payment. In this example, this home buyer had 33%, so this home buyer doesn't have to pay mortgage insurance. And the monthly payment is lower, $4,218. So just a reminder, the more you put on down payment, that helps to reduce your mortgage payment. Let's get some clarity on where these funds come from and how much we're talking about. So again, back in 2016, Measure A passed, the Affordable Housing Bond, and they set aside $25 million for first-time home buyer program. That's where the Empower program was created. Now this year, we're looking to assist 50 households to become homeowners. If we can assist more, that's fine too, but we're just giving an example. We'd like you to be one of the 50. Don't forget now. Don't worry that if we get 51 or 52, that's fine too. If we get more than that, that's fine, but we'd like to assist as many as we can. Okay, it's time for another test question. Just kidding. I did say that these questions are not being graded. So let's go ahead and take a moment here. I'm going to stop sharing. I want to go ahead and go back. All right, let's go to poll question here. All right, let's launch it. So we have here in the poll question, when it comes to buying your first home, do you feel like you know where to start? Some of us do, some of us don't. There's no wrong answer. Anyone that's coming in late, welcome. We are not having a test. We just want to get the pulse of how everybody's doing out there with this home buying process. Okay, I'll go ahead and take an end there on this, and let's see how we did. So about 56% of you, this is very close, said, hey, I could use more help. 44% of you said, yes, I got it down. Great job, everybody. Thank you. And therefore, let's continue on, learn some more. What are some of the requirements for the Empower Down Payment Assistance Program? It is looking to assist households with up to 120% area median income. What does that mean number-wise? Let's look at that. So if we have a household of 4 people, and that total household income cannot exceed $2,200. And on this household, it could be 4 adults, it can be mom and dad and 2 children, or it could be a parent and 3 children. That's how they count it, the number of people in the household. But that total income for that household for the Empower program cannot exceed $202,200. Empower was also created to help single-person households to get their first home also. So if we have 1-person household, that total income cannot exceed $141,550. So just remember, you'll see these slides and these calculations on our webpage, but the household cannot exceed these limits. Again, I got some exciting news. As of March 3rd, that was last Friday, the down payment assistance for the Empower program was increased to assist up to 30% of the purchase price with a maximum loan amount of up to $250,000. I'm going to say that again. Now Empower can assist with up to 30% of the purchase price, and that's with a maximum loan amount of up to $250,000. The home buyer comes in with a minimum of 3%. They can provide more. Like we said, more down payment, better for the home buyer, but minimum 3%. Now, another great news is there's no maximum purchase price. As of last Friday, no maximum purchase price. The home buyer must live or work in Santa Clara County. I'd like to clarify something here. This does not mean you have to be an employee of the county of Santa Clara. As long as you are working somewhere in the county of Santa Clara, you can qualify. Or you could be living in the county of Santa Clara and working outside, one or the other. The funds can be used to purchase single-family dwellings, townhomes, or condominiums. The funds cannot be used to purchase below market rate program homes. You cannot use it for manufactured homes or mobile homes. The property must be located in Santa Clara County. So you're looking to buy a home only in Santa Clara County. Some more requirements. The home buyer and the household has to be first-time home buyers. That means you have not owned or had ownership and interest in a home for the past 3 years. So if you have, say, helped somebody, a family member in another state buy their first home, but you've never lived in it, it was never meant to be for you, if your name is on that title or the loan, you are not a first-time home buyer. The middle credit score is 620. The home buyer must come in with a minimum of 3% of funds for the down payment. This is called borrower contribution. The borrower should also come in with a minimum of 2% for closing costs. Another requirement is what we mentioned earlier, attendance to a designated agency, and this would be for the HUD certified 8-hour home buyer education class. Again, now you have an option of 9 different agencies to look at, and you can be either in person, virtual, or online. Who has to attend? All the borrowers on the loan, including non-borrowing spouses. Each of you register individually, each of you pay whatever the fee is, and each of you will receive your own certificate. Another requirement is owner occupancy. This means that the home buyer must live in the home they purchase. They cannot rent it out. They cannot rent out any portion of the home while they have the Empower loan on it. Now, also because the funds come from the County of Santa Clara, they're going to be monitoring on an annual basis to make sure the homeowner is in compliance with this, that only the homeowner and the immediate family are living there while they have the Empower loan. The term of the loan is 30 years. So this home buyer has up to 30 years to pay off this loan. They pay it off when they want. There's no payments on this loan until you're 30, then you have to pay it off if you haven't paid it off beforehand. If you choose to sell the home at the time you own it, you will pay off the loan, the Empower loan at that time. Or if you take out a cash out refinance during the time you own the home. If you take out a cash out refinance, then yes, you have to pay the Empower loan at that time. There's no prepayment penalty, therefore you can pay it off early if you want and have it taken care of. Now, what is it you're exactly going to pay back? You pay back the amount you borrowed on the Empower loan along with the share of appreciation. The share of appreciation is going to equal the same percentage amount of the Empower loan. So if the home buyer only needed 10% from the Empower loan, when they finally say they want to take out cash refinance, they're going to pay back the 10% amount from the Empower loan along with 10% of the appreciation. Now with the new changes, if the borrower had wanted all 30% of the Empower loan to help with the down payment, then when they do decide to pay off the loan, they'll also pay back 30% of the share of appreciation. This is to be paid back in one lump sum. No partial payments, no installments. When you're ready to pay it back, you pay both amounts in one lump sum. The Empower loan also allows for deductions for borrower contributions, such as qualifying capital improvements, and non-reoccurring closing costs. So when you're ready to pay that off, if you have those that apply, they can deduct it. The share of appreciation that we've been mentioning is capped for the first 10 years. This means that the amount of the share of appreciation cannot exceed the original and par principal loan amount. Let's take a moment and do an example and see what Yvonne is talking about. Here's an example. I know the numbers, you may laugh, but if I do lower numbers, I can explain it. So let's say Yvonne purchased a home for $300,000, and now in year 5, I sell it. At the time that I bought the home, I had the Empower loan help me with 10% of the purchase price, so that's $30,000. But in year 5, when I sell it, it sells for $1 million. I now have $700,000 of appreciation in that home. During the time I owned it, I did accrue some borrower contributions that totaled $10,150. So the calculation would be, I take the $700,000 of appreciation, I get to deduct the borrower contributions for a net appreciation amount of $689,850. 10% of that is $68,985. Now this is year 5. So what am I actually going to pay back to the county? I pay back the $30,000 of my principal loan amount on the Empower loan plus $30,000 share of appreciation, because that share of appreciation cannot exceed. It can equal the principal loan amount, but it can't exceed it. So I'm paying back a total of $60,000 in year 5 to the county. What happens after years 11 through 30? What happens then? It's called the uncapped period. So let's look at the same calculation and see what I pay the county now in years 11 through 30. In this example, I'm paying back, I sell my house in year 15. Everything is still the same. I get the 10% from my Empower loan. When I sell my home, it sells for $1 million, so I have $700,000 of appreciation. Let's do the calculation. I have the $700,000. I get to deduct my borrower contributions for net appreciation amount of $689,850. Now 10% of that is $68,985. Remember, this is year 15, the uncapped period. So what do we pay the county? I pay the $30,000 on my Empower loan plus $68,985 for the share of appreciation for a total of $98,985. That's what it means by the uncapped period. Anybody that is coming late, I'm going to pause a moment. If you came in, no problem there. I'm just going to make an announcement that we will be emailing a copy of these slides by end of business day tomorrow. Back to business. So here's a rule of thumb. From years 1 through 10 of the Empower loan, the share of equity is capped. Therefore, the share of equity cannot exceed the original Empower loan amount. From years 11 through 30, it is in the uncapped period. So therefore, the share of appreciation can indeed exceed the original principal loan amount for the Empower loan. Now, I'm going to ask another question, and let's go ahead and ask, have you received a pre-approval letter from a lender? So we're going to ask that. Let's take a moment here, and it could be yes or no. You may have, you may not. No wrong answers here. Let's take a few seconds here, and we'll give you a chance to contribute your response, and let's go ahead and end that. All right, let's share. Looks like 78% of you haven't yet received a pre-approval letter. Okay, not a problem. But 22% of you have. So that 22% of you probably already gets an idea what you had to provide for documentation to receive your pre-approval letter. So let's go into a little more detail. What is your first step for the Empower program? It's not an application, but it is an online interest form found on our Empower webpage. We call it pre-screening. The form is easy to fill out. It asks some basic questions about your household. It's going to ask, how much do you have saved now for down payment and for closing costs? You just give us an estimate on there. Have you taken a home buyer education class yet? If you have, we're going to ask you to email the certificates to us at Housing Trust in PDF format. I'll provide that email address a little later. Now, once we find out that you have funds for down payment and closing costs, that you've taken the class, your next step then is to reach out to a participating lender for pre-approval. So I want to make a note here. We work with participating lenders. We can accept their pre-approval letter. If you have a pre-approval for someone from a lender that's not participating, we would not be able to accept their pre-approval letter. So you definitely would like to receive the list of participating lenders. You'll receive it when you have completed your pre-screening. One thing I'd like to make a note here, when you do reach out to the participating lenders, what do you talk to them about? Definitely, these participating lenders have very competitive interest rates, so we ask you to inquire what are their interest rates, what are their closing costs, do they offer lender credits, do they have any grants? You won't know unless you ask. So definitely shop at least 2 of them so you can do some comparing. If you receive more than one pre-approval letter from different participating lenders, you will need to decide which is the one's pre-approval you want to work with, and if that's the one we'd like to receive. You don't want to be sending multiple ones to us, just the one you want to work with. Let's take a little more note here. I had mentioned earlier, and I dropped a hint to those that have received a pre-approval letter, that you probably had to provide a lot of documentation, and you do. The participating lender is going to ask for various documents. You want to get it to them quickly, all of the documents they request. They're going to have you sign disclosures, get it all back to them right away. The sooner you get the documents to them, that you get the disclosure signed and back to them, they can begin working on their pre-approval letter. Keep copies of the documents you provide to them, because after you have received your pre-approval letter, later you're going to apply for the Empower program, and a lot of the documents we're going to ask you for could be the same. So that's why I said keep them to the side. Now, once you've received the pre-approval letter, and I want to emphasize again, you made the call and decided which one you want to work with. So you get that over to us in PDF format. And here's where you're going to email the certificates to us from the designated agency. And here's where you would email your pre-approval letter. And that's Empower Home Buyers, SCC, at housingtrustsv.org. Once I receive it, we can go ahead and set up a 30-minute pre-purchase phone review. And that's with me, and I'm the one that's going to reach out to you. It's going to be a Zoom call, and you're going to have your cameras on. All adults in the household must be present for the Zoom meeting. So if you're out of the country, you have to wait until everybody's back in the country to have this Zoom meeting. So you want to have it, it's going to be cameras on, and we'll schedule a time that works for all the adults. So now you're ready to apply for the Empower program and fill out an eligibility application. As you remember in the beginning, that interest form was not an application, but now we're ready for that Empower application. You're going to fill it out now. I'll work with you on providing access to box.com so you can upload your secure documents to a secure portal. And once we have received all the documents we requested, our underwriting department will begin to review them. Our underwriting department will probably have some conditions you might have to respond to. You want, again, I can't emphasize enough, you want to upload the documents as quickly as possible, respond to the underwriters as quickly as possible. When the underwriters have received all their documentation and you've met the conditions, it could take them maybe 14 business days or less to come back and let you know whether you've been you will be receiving a program eligibility determination letter for the Empower program. I want to make another note here. This means you cannot be shopping for a home in the beginning at step 1 or even step 2 when you're reaching out to the lenders. You want to wait until you've been approved for the Empower program. Then we can provide you with information about you reaching out to your realtor, you go shopping, now you're ready to shop. That's why we're celebrating. So here's some contact information for you. Our website is housingtrustsv.org. The Empower webpage where you can find that interest form, that's step 1, is housingtrustsv.org/empower. When you're submitting your certificates from the designated agency, when you're submitting your pre-approval letter, you'd email it to Empower Homebuyers SCC at housingtrustsv.org. You can also call us and leave us a message, because remember, we're working hybrid. Sometimes we're in the office, sometimes we're not, so it's best to leave your name, your number, and please let us know what your question is. And you can call us at 408-703-3837, extension 301. I'd like to take a moment here to clarify something else, provide some additional information for you. If you have received a pre-approval letter from a lender you chose, but you haven't yet taken the required homebuyer education class from a designated agency, we need to receive the certificate first before we can accept your pre-approval letter. So just know there is a step process, a format that we want to guide you through and work with you on. So just remember, the certificate must come first. Now, I did say that we were going to talk a little bit more about another program, and that is the Homebuyer Empowerment Loan Program, HELP. It is funded by Housing Trust Silicon Valley. It was created to help home buyers who have slightly higher income limits than Empower. So remember, we looked at some examples for Empower, and we said your household income must be within those income limits. If it exceeded Empower, there's a possibility that HELP can be of assistance to you. Let's take a look at this slide here. We're going to do that same example of a household of 4, say mom, dad, and 2 children. The household income cannot exceed $235,900. So that's a larger income limit. HELP was also designed to help single-person households. So a single-person household who may exceed Empower, their income limits for HELP cannot exceed $165,130. The maximum purchase price for the maximum purchase price for HELP is $800,000. It is also a deferred loan up to 30 years, and it can assist with up to 10% of the purchase price. It can be used to help purchase a single-family dwelling, a townhome, or a condominium. You cannot use the funds from HELP to help with a below-market home, no manufactured homes, no mobile homes. And you can shop for a home with the HELP program in Santa Clara County or in the cities of Menlo Park and East Palo Alto. So you have a larger area where you can shop for a home with HELP. Let's do an example with the HELP loan. As I mentioned, you don't make payments. It is a deferred loan also. And you have up to 30 years to pay it back. If you sell the home while you have a HELP loan, you will be required to pay back the HELP loan at that time. If you do any type of refinancing with the HELP loan, you will be required to pay it back at the time of the refinance. So it could be for rate and term, it could be cash out refinance with HELP. You'll have to pay it back. You pay back the principal along with the share of appreciation. Also, the share of appreciation will equal the same percentage amount of the help loan that you borrowed. So let's do an example. I buy a home for $700,000, and in year 7, I sell it. At that time, I needed 7% from the help loan to help me with the down payment. So that was $49,000. When I sell my home, it sells at $900,000. I now have $200,000 of appreciation in the home. So the calculation would be, I take my appreciation, 7% of that appreciation is $14,000. The total amount I'm going to pay to the housing trust will be the $49,000 from the help loan plus the $14,000 of appreciation for a total of $63,000. Again, you pay that in one lump sum, no partial payments, no installments. There's no prepayment penalty. You pay it back when you're ready to do so, but you have up to year 30 to pay it off. Let's talk about some program similarities and differences with Empower and Help. For Empower, it can assist with up to 30% toward the down payment. And that's when? Effective the 30th. As of March 3rd. A lot of threes in there. Help can assist with up to 10%. The maximum income limit for the area median income for Empower is up to 120%, but the income limits are higher for Help, up to 140%. There is a share of appreciation that is due when you pay back the Empower loan, and there's also a share of appreciation that is due when you pay back the Help loan. With the Empower loan, there was the opportunity for borrowed contributions that you could deduct those. That option is not available for Help. Also with the Empower loan, there was a cap period. Remember the first 10 years? But Help does not have a cap period on that. Now, did you find this information helpful? I'm going to go ahead and run another slide here, so bear with me. Let's see how we do. And then let me know if you found this information helpful. Is anybody able to see the slide here? Let's try it here. Let me see. I think I'm having a little technical difficulty. Let's try it again. We'll launch it again. Here we go. There you go. Now I got it. Okay, now we're going to do it. So I'd like to let you know if you found this information helpful. Thank you so much. We'll take a few seconds because I'd like to go ahead and talk to you about some questions you may have. All right then. So thank you very much. Let's go ahead and see how we're doing. I'll go ahead and end it here. All right. So it looks like maybe 98% of you had said, yes, this could be of help. And maybe 2 or 3% of you said, no, it wasn't what you were looking for. And I definitely understand that's why you're here to learn. So let's go ahead. I have this here. I have that there. Let's go ahead and stop sharing. Now here's some important information here. We're going to have a live Q&A session here. But I'd like to let you know that if I'm not able to answer your question in the time we have, I'm going to ask you to please email your question to Empower Homebuyers SCC at housingtrustsb.org. A copy of these slides will be emailed by the end of business tomorrow. This webinar was not recorded. Also, if you have a specific question, maybe it's personal to your situation, like possibly meeting an eligibility requirement, we also ask you to email that to us. So as we go through the questions, you may hear me say, please send your question in an email instead. And that's where you would send it to. One thing I'd like to take a note here, and let's go ahead and answer questions and see how time allows. I'd like to take you to our website, housingtrustsb.org. And remember, to complete the interest form, you go to housingtrustsb.org/empower. And if you're interested in help, we have a website for help, and that's housingtrustsb.org/help. You can also call us And our phone number is 408-703-3837, extension 301. I'd like to take a moment and answer some of the questions that I can, but I also would like to take a moment and see about getting you over to our website too. So let's see if time allows. Here we go. And thank you everybody for letting me know you can hear. Let's see, Martha asked, can it be used with a below market rate program? No, you cannot use the funds to help purchase a below market rate unit. Good question, though. Thank you. All right, let's see here. We had here, Emily, is being self-employed business owner make us ineligible to qualify? No, you can definitely provide a profit and loss statement. Do the employee's wages count as gross income? When you're doing that, you want to be able to say that your gross income is based on your profit and loss statement. So that's what you want to look at. Let's see, we have Emily on that, and hope that helped on that. Now, your employee's wages would be after you do deductions. We want to see what your profit and loss shows before you have the deductions of the employee's wages or whatever business expenses you have. So that's why you need a profit and loss statement. We'll talk more about that when it's time for you to provide the profit and loss statement. Now, yes, you can have a copy at the end of tomorrow, Con. So yes, you'll get a copy of the deck. Thank you for asking and for reminding us, everybody. Now, if anybody had audio, I don't know if they had, sorry that you might have missed a few things on there, if it was cutting off. As far as I know, we were here working on it, so it might have been, we do have a storm coming in, so everybody definitely could be a reason for that. How often does a 33% be granted? Well, what happens is, Nicholas, it's the Empower program can assist with up to 30%. And that can be for someone who's going to be purchasing a home. The 3% will come from you. If you could even provide an additional, so you could have even more than 33%. So you can have up to 33%, you can have less. Maybe you don't need the full 30% from Empower. You'll know more when you're talking to the senior lender, what you would need to provide. For that, but definitely the home buyer, everybody is entitled to the 30% if that's going to work for them, but some people don't need it. So that's a good question. Remember, you want to have more than 20%, and that helps also so you don't have to pay PMI. Good question. Hi, Dan. Yeah, so you said it was intermittently. Hope that wasn't on our end because at this point, my slides are working, so sorry if it was intermittent. Okay, thank you for letting us know. No, the session was not recorded. You will get a copy of the deck by end of business day tomorrow. All right, thank you, Miguel. Does the County of Santa Clara? Yes, good question, Josefa. So yes, San Jose is included in the County of Santa Clara. There's a lot of cities in the County of Santa Clara, and they would be you could be shopping for a home in any of those cities. Now, Miguel, can you refinance later if the rates drop? What would happen to down payment assistance loan? Okay, that will depend on which program, Miguel. So if you have Empower, you can refinance with Empower if the rates drop and you do not do a cash out refinance. You could do that and still keep the Empower loan on there. Now, if you have the HELP loan, and you decide to refinance for a rate or term, you would be required to pay it back. Remember, we did cover 2 loans today, so they do have different requirements. I'm glad you brought that up, Miguel. All right, thank you, Cheryl, thank you. Okay, all right, let's go ahead here. Let's see, we have here. Shayla, we have to work with lenders you provide, yes. What if you have a lender? Good question, everybody. Catch this. If you have a lender you'd like to work with, you can have them reach out to us, and they can, if they'd like to become a participating lender, and we'll be happy to reach out to them to talk to them about it and what it requires from a participating lender. So yes, if you have a particular lender you would like to work with, you can have them reach out to us. Good question. Is there a cap on the additional down payment we can contribute? So you have up to, you can provide 10% if you wanted to, so you could have 40% if you would like. That would be a good question on that. You could have up to 40% on that. So you to come in 10%, Empower could help with 30, that's 40%. That's double of what Empower used to be. Great question. Now, I'm glad I'm seeing the numbers for myself here. This is wonderful information, so you guys are getting it firsthand. Let's see, Hugh mentioned the gross annual household income is the last year. Good question. What you want to look at is your pay stubs, current pay stubs. Just look at your month's pay stubs and you can do the calculation from that. When it's time to provide documentation, we are going to ask you for tax returns, but we're also going to ask you for pay stubs to base your household income on. So you'll provide 4 pay stubs. So it's better to look at your pay stubs that's more recent and current. But you will, at the time of application, provide that and tax returns too. Good question. What if you don't sell the house? Can you still pay back the $30,000? So a reminder, Joe, yes, you have up to 30 years to pay off the amount. If it was $30,000 that you borrowed on the Empower loan, you will have up to 30 years to pay it off. But at year 30, if you didn't sell the house, you are still required to pay it back. And a reminder, you must also pay back a share of appreciation in one lump sum, the loan amount and a share of appreciation in one lump sum at year 30 if you never sold the house. Great question. All right, how are we doing here? All right, if you pull equity within the first 10 years, does the cap repayment apply? So if you want to take out, good question, cash out refinance within the first 10 years. So you want to do a cash out refinance, you will have to pay back the loan at that time along with the share of appreciation. At any time that you want to take out equity in the home, you would want to go ahead and pay. You will be required to pay back the Empower loan with the share of appreciation. Good question.
I'm sorry.
Thank you. Hi, Hong.
Hi.
This is our program manager. Hi.
Hi, how are you? I just wanted to clarify furthermore on that question that
Yes.
the person had. So equity, take out equity on the property that has the Empower loan program are not allowed. So now if it's refinance for a rate and term, what it means is lower interest rate, especially around this time, right? We're locked in a high rate, and for the next few years in the further, if the rate are low, that is an option, right? So if you're refinanced because the purpose is to lower your rate, and for the term, to help for affordable housing payment, that's something you definitely want to reach out to the county, let them know that you are thinking about doing so, and make sure that you let them know so that they say yes or no, but that is an option that the county would allow. However, it's best to reach out to them at that time. You don't want to wait till you got an appraisal and then you contact them, and if anything, they'll say no, then what cost that appraisal, right? So make sure you reach out to the county.
Thank you. Thank you. All right. Great. Thank you, Con, that you can see the slides. Thank you so much. You can hear us. Very good. Schwan asked, green cards, it would be permanent resident green card. It could be a naturalization certificate. You can have a valid U.S. passport. You can have a U.S. birth certificate. Visas, work visas would not be considered a permanent resident document that you could provide. Good question. Thank you.
Let me also
yes.
be able to continue to is that so we have a detail on our policy and procedure, and you can click on our presentation to read to the web page. But the web page has the policy and procedure. Will tell you what documentation will be accepted under residency, right? So permanent residents, U.S. citizen, other qualifying alien residents, and but HB1 visa is not one of them. Now, however, that is applied to borrow, co-borrow, and household member, adult household member. Also have been updated and include additional documentation that might be acceptable. So I would recommend you to go through that section in our policy procedure to see how that can apply, not only to your as a borrower, but to co-borrow, non-borrowing spouse who is your wife or husband who might not happen to be on the loan with the senior lender, but are required to be our co-borrow on our programs. And also that, have certain type of documentation that I did not name here, but they might be still fit in the policy. So make sure you do check it out.
Thank you. Yes, we will have the links on our presentation for you to click on. Zwan said, how do you get the income numbers? Income for the household could be determined by a profit and loss statement. If you're self-employed, it could be determined by your pay stubs. We will ask you to provide 4 pay stubs, most recent pay stubs. And they will determine it. They will look also at your tax returns, but they look at your most recent pay stubs. Is that correct, Tom?
Can we, because is it on the Q&A chat? I'm looking at the Q&A. Is that what we're going off from?
Yeah. Yes. Let's see.
Okay.
Here. Let's see if we have. There we go. How do you get the income numbers?
How do you get the income number? If you can, the person who's type it in, can you elaborate more? What do you mean by how you get the income number? So we have the maximum income limit by household size on our website, and this one is annually update. We observe what the county, California Housing and Community Development Department will issue income limit by county annually. It's not a guarantee, but at the same time, around springtime, which we're very close to it, I observe them periodically. So when there's a new income limit, we will know and we will announce it. So sometimes folks or household happen to at this moment are not within that income limit for this program, but might happen to be. So make sure that you'll be on our mailing list so that you'll be notified. However, if that's not the question you're asking and it about how to calculate income, let me know if that's what it is. I can go in a little bit fast. So make sure you just retype, let me know what exactly when you say how to get the income.
Excellent, thank you. Oh, it's spot 31. I apologize that we couldn't get to everybody's questions.
I would say let's go over some of them because I know that there's a lot. Let me go through it.
Yes.
Okay, so I'm at a loss where we are and how we answer everyone, so I will do my best to just go through. So we have Rocky asking if I plan to sell my home soon. Can I use the help program to buy a new home? So our down payment assistance program have the first time home buyer status requirement. So what it means is that you do not own a home, not forever, as long within the past 3 calendar years. So as long you be able to show us proof that the home was sold 3 years calendar, then at the time of application it says more than 3 years, you'll be able to utilize one of our programs.
Thank you.
Next one is, will it work for a self-employed borrower? Yes, I'm not sure why would that be. Well, we ask for, income documentation, whether it's W-2, profit and loss. Just that what happened is that we will look at your profit statement, profit and loss, and also look at your 3-year tax return, which you either claim as self-employed or some type of other tax return for the business. Whatever that is, we'll make sure that we look at the income, be able to determine that if your income are within the income limit by the household size. Next one we have is, if we look at payment, do we look at wages or total? Does count overtime? So for our program and how we look at income is we look at anything that you receive. So that can mean that even your household member having received benefit like SSI, child support, we count that as income too. And remember, I mean, mentioned about household income based on a household size. What does that mean? It's the entire household, adult household member, including the main applicant, co-applicant, who happen to be borrower, co-borrower. So everybody who earning income, receive benefit, we consider that income. And just make sure on our policy procedure, what considered income, what is excluded as income. So if you, that we would count and make sure that you are within that income limit for that household size, okay? And then as for your wages or total, we'll look at gross, not after deduction, not 401k deduction, benefit deduction. We look at the gross income, okay? And also overtime, bonus, commission. So it really depends on what type of structure of your earning would be, whether you are, work with base and commissions, sporadically have bonus. We'll look at your pay stub, and then we'll also look at your past, because we do a verification of employment and income, and we'll see how the pattern looks like. Thank you. And then the next question we have is, self-employed would need to show 2 years tax return. So for our program, I know that traditional lender might ask for 2 years, we ask for 3 years tax return. The next one we have, if we have a job that offers in San Jose, would I even qualify if I currently not live in the area and haven't started a position yet? So for one of the requirements is that either you live or work. So at the time of application, you have to show that, okay? So what it means is that you have a job offer, but once you start and you have the documentation to prove, you can apply. But that also isn't, one thing you want to keep in mind is that if you just start your job, we do need pay stub to look at your income. So then we're gonna have to also be able to you have to be able to provide pay stub, multiple reason pay stub to show for the income determination. I'm going to go for 4 more because I know we're running out of time, but I know everybody have a lot of questions. Just make sure that if I don't get to your answer to question, please feel free to reach out to us by email. We are experiencing some high volume inquiry, but we definitely will answer every single one. So make sure that if I don't get to your answer now, we will do that. Just give us time and allow us time and patience. Thank you. So for some religious believing there's Guru, can we have a copy of agreement to be reviewed? So if you're asking about the agreement, if you're talking about the promissory note and the deed of trust, it's on our website. We have a blank document for you to review to see if, and you can consult with your CPA or your attorney on the language. Feel free to access our webpage. We have it available. It's on our presentation here. We have a hyperlink. Once you get the presentation, you click on it, you'll get to the web page, you'll see there's a guideline as well as a blank doc, the note and the promissory note and the deed of trust for you to review them. Do you accept? I think we talked about that already. So let's go over. Do you count SSI income? Yes. If we explain it. Does help have an approved household income like the Empower? So I think the number that we keep saying is just a number, but it's first come, first served. We have funds available. So even for Help or Empower, it's all about once you start submit application, we review them, we can pre-approve you, go shop for your home. Once you get a contract, you get an agreement, then yes, we can, reserve the fund for you at the time when you have a contract, complete the purchase application, we can reserve you fund. And it's a first come, first served. There's no, waiting list or anything. You can start now, anytime. There's no limit. If you pay off the home early, for example, in 15 years, do you need to pay back the Empower early? So the thing is, the question is, with our program, it's have 30 years. You can whether pay it off early on the first senior mortgage, that's up to you. However, remember, you have the Empower loan. What's going to happen is there's a requirement. You're gonna have to stay on that home as permanent, I'm sorry, not permanent, sorry, stay there as your primary resident. So if you decide that you wanna do something with that, property, whether to lease it out, rent it out, you can. So one way to do it, pay us off. One last one, are you allowed to pull out equity if you, okay, so I think we've talked about that already, so it's a no. So last one would be, how does residency affect other non-borrowing occupant who be living in that property? So so I would say in this case, we call them adult household member. They also have to have, residency documentation. So one of the things is that, like I mentioned, we have alternative documents that to, address that. But one of the things is driver's license. You're right. We need that to have identification. Now, if they don't have documentation to prove their residency, there's alternative. ITIN number, documentation, things like that. Please check on our website. Okay. I think that would be it. I know we go over time. I appreciate all your time being here with us. Definitely, there's a lot more questions. One way to do it is just copy and paste your question, email, send it to Empower Homebuyer SCC at housingtrustsv.org. And also feel free to call us at our general Empower phone number, 408-703-3837, extension 301. And we'll respond to you once we receive your voicemail. All right, well, thank you very much, everyone.
Thank you, everybody. Enjoy the rest of your day and be safe out there. Thank you.
Thank you, everybody.
Thank you.
And stay dry. Stay
We
dry.
don't close it yet, because I want to copy all these questions. Or is it safe?
Yes.
Oh, perfect. Yeah. Well, we have a lot of questions.
A lot. Almost as many as the attendees.
Yeah, I don't mind going over